I'm Matt Bishar with NAREITWeek.com here in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me today is Justin Hutchens, Chief Investment Officer with HCP. Justin, thanks so much for joining us.
Thank you.
What are the main benefits that you anticipate from the spinoff of your ManorCare skilled nursing and assisted living assets?
After working with them for a number of years to try to reposition the portfolio, we have found that the best solution for their portfolio moving forward is to spin it into a new entity. It'll be an entity led by Mark Ordan, who has a nice track record in turnaround companies and spin companies, notably Sunrise Senior Living. And he and his management team will work with the portfolio to maximize value. They'll have a relatively good balance sheet. They'll have a dedicated business plan towards maximizing value in that portfolio, which will help our shareholders to realize the maximum value over time in that portfolio, and it helps HCP to move along with our business plan.
Now, picking up on that more broadly, what is HCP's growth strategy going forward?
The remaining HCP will be a very interesting company, and I think it's arguably the best diversified healthcare portfolio in the REIT space. And what you're left with is half the company's senior housing, and that's diversified with independent living, CCRCs, assisted living, memory care. We have a Brookdale relationship, and we have a handful of other relationships as well, making up that portfolio. And then the rest is really split half and half between our medical properties, which is by and large medical office, and we have a small portfolio of investment-grade hospitals. And then we have our life science portfolio, which is a leading portfolio on the West Coast. And so one of the benefits of removing post-acute from our portfolio is our improved cost of capital. They trade at a higher cap rate, they drag on our NAV. Removing that puts us in a better position to be competitive to go after private pay assets. We'll be 95% private pay. We'll pursue senior housing, pursue medical office, and we'll pursue life science.
And lastly, any other key takeaways to consider when looking at the new HCP?
Well, the new HCP is very exciting. We've had new management team members join the team. We have a very solid portfolio that I mentioned to work off of, and we have a growth plan that we're very excited about as well. One aspect I'd point to in senior housing, for instance, as we've taken on more RIDEA exposure, is that we've beefed up our management team with folks that have operating experience. Some have C-level operating experience, others have asset management operating experience, and others have financial analytical operating experience. What we're offering to our operators is support really in three categories. One is the strategic direction of capital expenditures, which would include refreshes, repositioning, timing, capital allocation, with the goal of returning capital over time, enhancing the growth profile of our assets. Second category would be market analytics, where our team can provide to the operator feedback on their pricing relative to market positioning, and help them to make decisions moving forward to make sure that we're maximizing value in the assets and being competitive within the marketplace. And then another category is business analytics, where we can help look in the rearview mirror, look for trends and a number of different operating metrics, and give feedback to help operators to become more efficient, and not only to focus on their actual versus budget on a year-to-date basis, but to position their company to maximize positive trends, and also to address any trends that are not moving in the right direction. So we're excited about the senior housing focus. We think we'll have a lot of growth opportunity in a fragmented industry. Our medical office property platform has relationships with over 200 health systems and hospitals around the country. It's over 80% on campus, and it's 95% affiliated. It's one of the best in the space. We have very deep relationships. It's been a consistent growing platform for us. It gets about 2 to 3% organic growth, and it's had 9% compounded annual growth over the last few years from the standpoint of adding assets to the base. So it's actually been a little bit of a growth vehicle, even during a time where our cost of capital has been under pressure. And then in life science, we're in cluster markets. The biotech industry is red hot. We're in San Francisco primarily, and San Diego. We're 98% occupied. We've had over 5% organic growth, and we'll have an opportunity to do some more development and some repositioning of assets in that sector as well.
Justin, thank you so much for joining us.
Thank you. Appreciate it.
For more from REIT Week 2016, be sure to visit REIT.com.